This is something people usually just read about, right, in the
Yes,
newspaper or
yes.
hear in the news, but what's a basis point, right? Dollar deposits are now taxed at 20%, same as pesos, yes, higher from 15 to 20. So they're now at the same level, right? 2008, 2009, the global financial crisis. Our stock market, along with the world, right? It really crashed.
Good day to everyone, and welcome to this episode of the Sun podcast. And today we have as our guest someone who will talk to us about finance, about investment. But he is a lawyer by education, attorney Juan Paulo Colet. Good afternoon, attorney.
Yes, good afternoon, Tito. It's a pleasure to join you today and warm greetings to our viewers and to your growing fan base.
Na-measure ba yan?
Sa views, di ba?
Now
Yes.
you will add to the information that our audience has been listening to and watching. So you told me earlier that somehow you transitioned from lawyering. Actually, law became not really a goal when you were in high school, and then when you took up lawyering, and then you wanted to be in a business type of environment. Now you're in financial investment. Like, what is the difference between banking itself and investment banking? Can you explain, or is there a difference?
Yes, there's a difference. In fact, a lot of people confuse them. But if I were to simply explain investment banking, well, traditional banking, as we know it, is really, you know, taking deposits
Mhm.
from the public
Mhm.
and lending it out.
Okay.
And that's how the bank makes money, right? So on interest, mainly. But the bank also has other functions, like it engages in treasury, FX. It also has trust, right, where they manage funds for clients. Investment banking, on the other hand, we have two main businesses. Okay, the primary business is helping clients access capital or raise funds for them.
Not like a loan.
It can be a loan, right? But so it can be debt, but it can also be equity.
Equity meaning a share in a
Yes, a
particular
share in a
business.
business or a venture, right?
Mhm.
So, for example, our clients consist of mainly corporations, right,
Mhm.
or entrepreneurs, and even the government's a client. So, for example, for the government, recently we did what's called the retail treasury bills, RTBs.
RTBs.
Yes, RTB Series 31. Recently, we raised more than 500 billion pesos
Mhm.
for the government. So, China Bank Capital was one of the joint issue managers. So, basically, we organized the transaction and we helped market this to the public and generate the funds needed by the government. Now, in the private sector, going back to what you mentioned earlier, loans, it can be loans because, for example, a company wants to put up a power plant, let's
Mm.
say a solar farm, right? They need equity for that, and they also need debt. Usually, when they go to us, they only need the debt component because they've solved for the equity. So we help arrange that. So if they appoint us as arranger, we will reach out to banks who might be interested to lend for that project, and then we basically organize a transaction, coordinate the parties, and help people get to the documentation, to signing, to closing. So that's mainly our role. No, that's the first part of the business.
Okay.
And I'd like to add that, I think we're also more commonly known for capital markets deals. These
That
are,
one, I'm interested.
yes.
That one.
So we do bonds,
Mhm.
corporate bonds, bank bonds, and then we do equity transactions like IPOs, initial public offerings of companies, or follow-on offerings of companies. So that's the main business of an investment bank. The other business is providing advice. So we provide financial or transaction advisory services. So these are mainly to big corporations, right? Let's say they want to do a M&A, a merger or an acquisition. Uh, Sometimes they would engage an advisor
Mhm.
to help them in the process, to advise them, to assist them in negotiation, and then to help the parties get to closing.
In terms of your contribution to the economy, how much investment is generated by firms like yours?
Okay, so it's not direct, no. The main sources of so as I mentioned earlier, we sort of like connect people with capital,
Right,
right? With those who need capital or
right.
those who need the funds, right? But our role as an intermediary in that respect, right, is we make this allocation of capital in the economy possible so that we enable a lot of projects to come to fruition, right? We enable, for example, the government to raise funds that it can use for, social services or for infrastructure. We've helped companies put up power plants to generate more affordable energy in the country. We've helped, for example, companies put up tourism developments that generate employment and attract, tourists that helps the local economy. So we view ourselves as enabling, yeah, the formation of capital in the economy and the allocation of capital in the economy to productive things.
So in the country right now, what happens is, as you were saying earlier, you have many firms or investment houses. Can say,
Yes, that's
yeah,
correct.
investment houses, and you group together to be able to answer the need of some companies who want to embark on projects. Now, does that factor in terms of your the obligation of a certain company in terms of providing for, like what you mentioned, social services, something that will help the less advantaged sectors of the population? Is that part when you do an evaluation?
It's not strictly part of it. It depends really on the objective of the client, right? So some fundraising are, let's say, for purposes of perhaps refinancing their debt obligations. They borrowed before, and now these, let's say, loans are maturing, right? Or these bonds are maturing. So they need to access the capital markets again to refinance that. Okay. But maybe to your point, we do help clients with what we call sustainability financing or which can be bonds or loans. So this is a relatively new product. Okay, we did our first sustainability linked loan for a real estate company in March this year. The purpose of that is they will borrow money. Okay, if it's sustainability linked, they can use the proceeds for any purpose. So in this case, the company used it for a condo development. But there is a promise or there's a covenant in that loan agreement that they are supposed to meet certain sustainability performance targets.
Okay.
So for example, these targets can consist of, let's say, making sure your building has a green certification,
Mm-hmm.
right? Or a LEED certification, or let's say you will, in exchange for that, you will also embark on providing socialized housing or affordable housing, let's say X number of units. Or you will take certain measures to lower your water usage or lower your greenhouse gas emissions.
Mm-hmm.
So that's an example of sustainability linked
Okay.
financing. Now, there are others, like, let's say, maybe you've heard this green bonds or social
How
bonds.
popular is it?
They're growing. In fact, right now, we are working on a number of deals with clients where they want to package it as a green bond or a social bond. In that case, the use of proceeds talagang dapat directly for, either green projects or social projects,
Okay.
right? So it's like helping finance renewable energy projects or providing for affordable housing. So
But
mas direct
you
siya.
don't solicit like for example, you're offering your services. Do you do that, or they come to you?
So we do pitch, we call it
Okay.
pitching. So we proactively approach clients. We show them, of course, we've done our analysis, right, our homework. And then when we approach them, we say, hey, you can do this,
Mhm.
right? You can do either, let's say, a plain vanilla bond, or what we've been suggesting to them is you can do a sustainability bond or sustainability linked bond.
Vanilla.
Plain vanilla, we call it.
What?
Plain vanilla, which is just a straightforward
That's my
bond.
favorite ice cream flavor.
Yeah. So that's a term we use in investment banking for, it's just a plain bond. So we call it plain vanilla. And then you have these social bonds, green bonds, and sustainability linked bonds, right?
So when you're pitching, that you do your homework already.
Yes.
And is it a big market in the country? I mean, are there really companies who are in need? And then do you bid for it as the lead arranger or part of the group engaging in assisting companies to have capital, refinance their loans and bonds and all that.
Yeah. So the market, well, we have basically the whole Philippine market, right? But the number of investment banks is very few. Maybe the most active ones, there's just like maybe 10 or less,
Mm.
okay, of us. So you can imagine it's very competitive.
Mm.
So when we pitch to a client, definitely other banks also pitch. So it's a matter of who gives the best proposal, and also who has the better relationships, right? And it can be the reverse. Sometimes it's the client who approaches us, right? So they will come to us and say, you know what, we want to put up this project. Can you help us arrange, let's say, a term loan facility for this?
Mm.
So it can be both ways.
And for example, if you say that there's only a few of you, are all of you based in the Philippines?
Mainly, yes, the Philippines, but there are a few foreign investment banks here. But the deals they do usually are those involving an offshore, uh, a leg to a transaction, or an offshore aspect to a transaction. So let's say, um, I think it was last year that SM, for example, did an offshore bond
Mm-hmm.
issuance, or an offshore security. And of course, if you're tapping the offshore market, you'll need to engage foreign banks.
Okay.
But there was also, a domestic component to that. And that's why China Bank Capital was also involved. So that's where I work, China Bank Capital.
But for multinationals, for example, who they wanna expand their presence in the country, for example, uh, it's their a foreign bank does that, or they also engage with local
So
investment
for
houses.
multinationals, usually they will tap the foreign banks
Mm.
because of their global operations. Usually they have a common banking relationship. So let's say it's a certain bank, let's say Citibank, for example, is the one servicing them in the US. Then of course, for their operations here, let's say that for that multinational, they would also usually tap Citibank, right? Or any other foreign bank they have a relationship with.
We've listened to all these terms that are like not really available to uh, most of us. They deal with companies that what's the capitalization of the least capitalization of companies you deal with.
Well, we have companies maybe with a market cap of, let's say, maybe half a billion.
Half a billion.
Yes. No, no. Yes, half a billion.
Half a billion.
Yes.
Okay. So now, for example, if they want to engage in overseas operations, normally you also help, but they have what do you call this?
A foreign bank.
A foreign bank
Yes.
assisting.
So we mainly focus on the domestic.
With regards to the government, how stable are the RTBs or the retail bonds? Can I ask that question?
Sure, sure.
How stable is it? Like when the government issues these bonds, tama?
Yes.
Yes. And then you're the bank that but it's not just the bank where you're working
Yes,
at,
it's
no?
a group of
A group of
banks.
banks.
Yes.
And then, is it difficult to do that? I mean, what are the things you think about when the government asks you to sell these bonds?
Yeah. Well, actually, it's the easiest bond to sell, to be frank, because well, the government's considered risk free
Really?
in the Philippines. So the theory is, the government would not go bankrupt. That's a theory because if it needs money, it will just tax the people, right?
Or print more money?
Or print money, which is not recommended, of
Not
course.
recommended.
Um, but yeah, it's relatively easy to sell, and that's why you see the usual RTB sizes are massive. Like this last one, as I mentioned, it's half a trillion, right? So it's safe. The last one is a 5-year RTB, which has an interest of 6% per annum,
Mm.
and so far the government has paid the interest on time.
And I understand you can get one for 5,000.
Yes,
Is that correct?
yes, because
Yeah.
they want it to be as accessible to retail investors as possible.
And where do they go? If it is offered, where do they go? They go to an investment house or they go to a bank?
Oh, they can just go to a bank where
Mhm.
they have an account, or what they did now is in GCash,
Right.
there's a G bonds,
Okay.
so you can buy it through G
I
bonds.
see. I
Yeah,
see. I understand. Also, I got a message that the interest is even higher than the 6%.
it depends. The last one was 6%, but there are
Not the
certain.
retail bonds, huh?
Yeah.
Mm.
Okay. You mean other bonds?
Yes.
Yes. Other bonds, yes, that are much higher. In fact, if you're a corporate, since the government is issuing, let's say, 5-year at 6%, the corporates, they have to issue above, right? Because, of course, the thinking is, you can't be better than the
The
government,
go.
right? There's a spread, what we call a spread or a margin. So there are some corporates that say they're, really solid. Maybe they're spread over the benchmark that we call it, the risk-free rate, which is usually the rate of government securities. Let's say they will charge, let's say, 20 basis points or 50 basis
Can you
points.
explain those? The
Yes.
basis points.
Yeah.
It's very vague.
Yes.
What does that mean?
This is something people usually just read about, right, in the
Yes.
newspaper or
Yes.
hear in the news, but what's a basis point, right?
Yes. Yes.
So it's just a term of art that represents a value. So 100 basis points
Okay.
is 1%.
Mm.
So 10 basis points is 0.1%.
1%.
Yeah. But, when we deal with these things, that's why the term basis points was coined. It's because you're dealing with these small amounts sometimes, right? So that's why they say 10 basis, 15, 20, right? Or let's say when the BSP will cut rates, they say the BSP cut rates by 25 basis points. What that really means is they reduced their interest rates or their policy rate by 0.25%.
5%.
Yeah.
Now, there was this controversy when the Department of Finance taxed a certain amount in bank deposits. There was so much passion or emotion, rather, that was generated when the Department of Finance issued that at a certain. Can you explain that further? Why would the Department of Finance tax that certain? Of course, you're not going to be defending the Department of Finance, but what is the purpose of taxing that part of savings deposits?
Yes. So that was the recent tax reform, right?
Yes.
So what I think some of the key things to note there are in terms of interest is right now, well, even before that law, peso deposits, right, were taxed at 20%.
Mm.
Okay, so every time you earn interest, let's say 1,000 pesos, right, there's a 20% withholding there that goes to the government. But if it's US dollar deposits,
Mm.
you're taxed at a lower rate, 15%.
Why is that?
It was a product of, previous legislation. I guess what the government wanted to do was attract dollars. And that's why, one of the incentives was to have a lower in withholding tax for
For dollar
dollars.
deposit.
Yes. So there was a differential, right? And then before this law also, if you have a, let's say, a long-term deposit, which means 5 years or more than 5 years, it's tax-free.
Mm-hmm.
Okay. But with this new law, what happened was dollar deposits are now taxed at 20%,
Higher.
same as pesos. Yes, higher from 15 to 20. So they're now, at the same level, right?
Level.
But the long-term deposits or placements, they were also subjected to tax.
Mm-hmm.
So there's no more exemption.
Okay.
Okay, so it will also be subject to 20%. My view on that is, and maybe a lot of people will, not agree with this, but actually it's fairness. Dollars versus peso, why should dollars be privileged, right? And with respect to long-term deposits, well, of course, the government now needs to raise money, and actually, there's a lot going on in social media now that will, you know, affect a lot of people, right? It's anti-poor and all that. But actually, I don't have the exact numbers, but when we looked at it, those with placements of more than 5 years, usually these are people with money. Okay, these are not ordinary workers. These are not ordinary professionals. These are people with money to spare, and therefore they can invest long term.
Meaning sleeping
Yeah,
in
they
the
can just
banks.
put it there. It will earn interest, and that interest will be tax free. Right?
Okay.
They don't need to access the funds immediately for any need. They can just set it aside for more than 5 years.
But the
Right?
thing there is, with those amounts over a long term, what are the options aside from putting it in a bank and earn a certain interest which is really low? Can I say that really low, and then it will be taxed? What are the? I was telling, maybe we should look for other means where to put the money.
Yes. It's good you asked that, Tito, because there are actually other options for savers, for investors. Of course, there's just a difference in risk. I'll go through some of them. Some people, they just put it in a savings account,
Hmm.
right? Savings account, the interest there is so minimal. Maybe 1%, 2% on a good day, right? You can put it in a time deposit, which is the next level, right? The thing with time deposit is you can't touch it for a while, but if you pre-terminate it, there's a penalty, right? But if you put it in time deposit, let's say for 1 year, maybe the best rate you'll get is 5% thereabouts, okay? Which is still subject to the 20% tax, right? Now you can move to other debt instruments, right? There are what you call bank bonds, okay? These are pretty solid instruments. They are solid. I mean, you just have to look at the bank who's issuing it, right? So if it's one of the big banks, then you can sleep soundly that it will be repaid. So these banks issue bonds ranging from, let's say, a tenor of 1.5 years, right, to maybe 5 years. So if you're more of the short-term person, you can put it in a 1.5-year bond, or if you want a long-term, you go for 5 years. This will earn you more than 5%,
Hmm.
sometimes 6%.
Hmm.
Okay. Now, if you want more, okay, so as we're moving up, the risk changes, right? I forgot to mention, you can also invest in government securities. So RTB,
Yes.
5 years, 6%, right? You go to the equity market, right? Shares of stock. There are two types.
Two
Common
types.
shares,
Okay.
yes, common stock, common shares, and preferred shares. Preferred shares are a type of stock that offers a fixed dividend yield.
Mm.
Okay, but it's not guaranteed. Okay, I think that's what the viewers should know, no? Because sometimes they think it's guaranteed, but in fact, if you look at the fine print, the company can always opt not to declare dividends. Okay, but usually they do if it's a quality company.
Mm.
Okay, because they sort of treat it like debt also. They have
Mhm.
to pay their investors,
Okay.
right? And of course, we also put in there, mechanisms to incentivize them to pay, right? So if they don't pay on their preferred shares, they can't pay on their common shares.
Mhm.
And the owners of the company, they have the common shares, diba? So they'd want the preferred shares to be paid so that they also get dividends. The preferred shares, you can get something between 6 to 8%. Okay.
6 to 8.
Yes. From quality companies. So, for example, Ayala Corporation,
Mhm.
ASEN Corporation, Philinvest Development, Petron, San Miguel. They're all offering preferred shares with, um, we don't really call them tenors. There's no fixed maturity. Okay. But there's what you call this is quite technical, but maybe something good to learn
Mhm.
when people look at preferred shares. You would notice there, let's say, for example, the preferred share is uh, NC3SU3. Okay,
Okay.
what that means is non-call 3, step up 3, which means that the non-call portion means the company that issued the shares cannot redeem it within 3 years.
Mhm.
Okay. And you would think, why would I want that? Why would I want a preferred that cannot be redeemed for 3 years? Because sometimes investors, what they want is they want fixed income. So they want predictability. I will invest in this. I want my cash stream for the next 3 years to be predictable,
Probably.
right? So if this preferred shares, let's say, is yielding 7%, I want that 7%
Right.
for 3 years. So that's that non-call 3. The SU portion, step up 3, means if the company does not redeem it on that date by the third anniversary, right, the dividend rate will step up. It will increase.
By how much?
So that's where it varies. But what we do, it's designed in a way to make it punitive, right? So for example, you would see that the step up margin or spread would be 3% or maybe 5%.
Mhm.
So let's say the company's dividend yield is the original is 7%. By the third year, they don't redeem. It will step up.
Okay.
So, and this simplistically putting it, what will happen is the 7%, you will add, let's say it's 3%. It becomes 10%.
Well,
Yes. So it steps up.
that's why it's punitive.
Yes. And for big companies, that's a lot.
So sort of discourage them
Yes, to
from.
let it run, right? So what usually happens is by the step up date, they will redeem,
Mhm.
right? So that's why for some investors, the preferred shares is sort of like a bond. It's like a
Mhm.
debt instrument that has a pseudo maturity.
But it's not like you own a company or part owner of a company if you have those.
No, not
No, not
exactly.
exactly.
I guess what will happen is, well, where it becomes handy is, of course, we don't want this to happen, right? But that's why it's called preferred, is when the company goes bankrupt, in the capital structure, let's say the company has assets, right? It will pay first its debtors, the bondholders, the lenders, right? If there's anything remaining, it will go to the preferred shareholders.
Oh.
And if there's still anything remaining, it goes to the common shareholders. So there's a preference, but it doesn't get naman to that point, no. Usually preferreds are they're usually redeemed. But I have to caution our viewers that you have to choose the company wisely.
Mhm.
Okay, if you see a preferreds there, don't assume automatically that it's safe, because there are some companies, right? And maybe I won't name them, but they've fallen on hard times or they're having difficulties, and well, they just did not pay their preferred shares.
So that's why we need a credible and a company that has integrity in terms of persons whom you will trust to handle your funds. Because in investment, whether it's a large company or even if you're a 5,000 peso being able to afford 5,000 pesos for 5 years uh, parked with a retail bond, you still need, yeah, to be able to trust, because everything really is built on trust. And what, as a parang last na to, with all the things that are happening or everything, there's always happening about politics. and there seems to be a loss of trust always. But we always elect, we always have elections, because if there's loss of trust, then why would we even vote? And you see young people lining up to register. So how will the capital market help in the trust issue, that the government is the most stable client? It's good to invest your money, because, as you said, it's one of the highest when you invest to our own government.
Yes.
How
Yeah.
does that happen? And what is your contribution? Do you go around TV stations and trust the government, invest in retail bonds and all that?
So actually, Tito, we do. So when we do, for example, RTBs, right? There are road shows that we conduct, and the banks fan out across the country. So since it's a group of banks, some banks are assigned certain locations, like maybe Cebu or even Davao or other locations, Baguio, Naga, etc. So we have to market the RTBs. I know they're risk free, but we still have to market them to generate interest. And when we go to these road shows, right? Of course, you're pitching a product, right? And ultimately, you're pitching the government,
Mhm.
right? You're saying, okay, these funds will be used for this and for nation building, for infrastructure, for social services, right? And so far, there is interest, there is trust, but maybe just to touch on something related to that, Tito, is people are concerned, right? Maybe with everything that's happening, some are maybe they're hesitant to invest, right? Um, but if you look at the history of our market, right, the market has endured, right? The financial system has endured. Um, there will be bad days, definitely, but sometimes, it's at times of crisis. It's those times when you don't feel like investing. You think things are so bad. Sometimes, or that's the perfect time to invest. I'll give you an example. Two examples. Um, 2008, 2009, the global financial crisis. Our stock market, along with the world, right? It really crashed. Okay. From October 2008 to around March 2009, you could have bought into our stock market when the index, right, the 30 most active companies, the level was below 2,000. Okay. Where is it now? It's 6,1. Okay. So in what? 17 years, well, if you're happy with this, you would have made what? Uh, Around 20%, right? Uh, and then the last one was COVID, March 2020. Our stock market fell below 5,000. So you could have gotten it below 5,000 March 2020. And now it's 6,1, right? So you would have gained, no, sorry. For 2008, 2009, you would have doubled, right, your money. Because from 2000 to 6,1, more than double your money. But from March 2020 to now, 5 years, you would have made 20%, right? And that's at the current level. Remember, we came from much higher levels recently, and the market is just really down right now. And that's why I'm encouraging a lot of clients, a lot of friends. Maybe this is the time to start accumulating stocks. And if I may add, Tito, no, in relation to tax, right? When you receive dividends from common shares or preferred shares, the tax rate is only 10%.
So even lower.
10%, yes. So if you have a preferred share that's yielding 6%, right, let's say, versus a bond that is 6%, sa bond, you will be taxed 20%. But sa preferred shares, if you're individual, 10% lang. If you use a corporation to buy, it's tax exempt.
So there you have it. Sabi ko na nga ba sa inyo, mga kaibigan ko na nakikinig, pag medyo depressed, kailangan hahanap ka ng paraan para sumaya ka. And where to put your money when things are down, That's where you invest your money because everybody needs that money. And when the government is taxing for those deposits, take them out and invest in the capital market, in the stock market, because that's where our economy grows. Kasi kuminsan, mas gusto ng kumpanya na mag-invest ka sa kanila kaysa ipautang lang ng bangko tapos malaki pa yung kaltas.
Yes.
So, JP, thank you very much. Medyo technical. Nagno-nosebleed ako. Sabi mga tenor, ang alam kong tenor, yung boses ng kumakanta. Oo, maraming bagay na kailangan nating matutunan. In fact, siguro, we need more time. No? We need more people. Kasi kailangan nating paluguin yung pera because everybody needs it. It will help the economy. It will provide jobs. It will also, especially our farming sector, the food security that we all need. So thank you very much for coming all the way here. I know you've earned awards. That's why you were chosen.
Thank you, Tito. Thank you very much for having me.
Yes. And this is the Sun Podcast on Finance. Magandang araw po sa kanilang lahat.